Good morning. This is Xpulse AI Morning Mix. Today is Sunday, June 28th, 2026. We're covering AI-driven chip costs pushing up device prices, a massive infrastructure fundraise, and what CIOs say about AI budgets for the rest of the year. I've got Orion with me. Ready?
Ready, let's jump in.
The New York Times reported on June 26th that Apple is raising prices for some Macs and iPads, and Microsoft also raised Xbox console prices, pointing to sharply higher memory chip costs tied to AI workloads. Orion, what's driving the memory squeeze?
AI training, and especially AI inference, are chewing through high-bandwidth memory and advanced DRAM. When big buyers lock in supply, pricing power shifts to memory vendors. The story also notes strong results from memory suppliers, and the knock-on effect has been choppy trading across AI and chip stocks.
So for listeners, is this a short-term bump or a new normal price floor?
More like a floor, at least near-term. Memory capacity takes time to expand, and AI demand is spiky but persistent. If Apple is comfortable lifting prices, they're signaling costs aren't easing fast, and they'd rather protect margins than eat it.
And Microsoft pulling Xbox into this says it's not just AI servers, right?
Exactly. Even consumer devices compete for components across the same supply chain. Also, the funny part, if you can call it funny, is your next laptop might cost more because someone else's chatbot got popular.
Crunchbase News reported on June 26th that Baseten raised a $1.5 billion Series F to scale its AI inference and deployment software. That's a big check for a company not everyone knows. Orion, what does Baseten actually do?
Baseten sells infrastructure software for running models in production. Think model serving, scaling, routing, and reliability for inference. It's aimed at teams shipping AI features that need low latency, predictable cost, and the ability to deploy across clouds or dedicated hardware.
Why does this category keep attracting giant rounds?
Because inference is where the bill shows up. Every user interaction costs compute. Companies want tooling that squeezes more performance per dollar, handles traffic bursts, and avoids vendor lock-in. Investors see it as the picks and shovels layer for thousands of AI apps.
Is this a threat to the big clouds or more like a complement?
Both. Baseten often rides on cloud GPUs, so it's complementary, but it can also pressure cloud margins by making compute more interchangeable. Inference is the new electricity bill.
Business Insider reported on June 26th on an RBC CIO survey, enterprise AI spending is still rising into the second half of 2026, with OpenAI leading adoption. The survey also flags a shift toward hybrid pricing, seat+usage. What's behind that shift?
CIOs want predictability. Seats give you budgeting and access. Usage aligns costs with value when workloads spike. Hybrid models also reduce friction for procurement. One contract, clearer guardrails, while still letting vendors capture upside when a deployment scales.
Does the survey suggest enterprises are pulling back anywhere?
Not broadly. It implies companies are willing to increase AI budgets without a wider software-as-a-service collapse. The tightening is more about accountability, measuring outcomes, than shutting down projects.
And OpenAI leading adoption, does that still look durable?
For now, yes, because developer mindshare and tool ecosystems matter. But the lead can narrow if alternatives offer comparable quality with more predictable costs, or if governance and data residency push buyers toward specific cloud ecosystems.
PeopleScience.com reported on June 26th that Anthropic had previously filed confidential draft registration paperwork with the Securities and Exchange Commission as it eyes the option to go public. Orion, what does a confidential draft filing signal at this stage?
It's a serious, we're preparing move without committing to timing. Confidential filings let a company work through regulator questions and refine financial disclosures before going public. For a major model provider, it also signals maturity and a need for ongoing capital to compete at scale.
If Anthropic does go public, what changes in the AI race?
Two things: transparency and pressure. Public reporting reveals more about revenue mix, margins, and customer concentration. And quarterly expectations can shape product and pricing decisions, especially around expensive model training cycles and the push toward efficiency.
Does this add heat to the OpenAI will they or won't they market chatter?
It does. A successful listing would create a clearer public market benchmark for AI infrastructure economics. And once there's a benchmark, everyone gets compared, sometimes fairly, sometimes brutally.
A few quicker developments to round it out. CNBC reported on June 26th that enterprise buyers are shifting from token maxing to efficiency and return on investment, which could pressure growth for providers like OpenAI and Anthropic. Orion, what's the practical change?
Procurement is getting sharper. Teams are optimizing prompts, caching, smaller models, and workload routing to cut spend. It doesn't mean less AI adoption, it means fewer wasted tokens. Providers may need clearer value metrics, tighter pricing, and more tools for cost controls.
On the creative side, Digital Applied reported from Cannes Lions on June 27th that Meta unveiled a brand-aware AI creative workspace, including a brand memory feature to keep generative ads on brand. Is this the start of real governance for marketing AI?
It's a credible step. Brand consistency is where generative tools usually break down in the real world. If Meta can tie creation, approvals, and testing into one workflow, it reduces risk and makes it easier for large advertisers to scale output without chaos.
Meanwhile, the Register reported on June 26th that Google published a policy paper pushing for pragmatic AI rules, like persistent disclaimers and limits around sexual content and models claiming personhood. And Transparency Coalition's June 26th roundup says state bills keep moving, with Arizona vetoes and California advancing a ban on AI public school teachers.
The theme is control by requirement, disclosures, content boundaries, and who can use AI in sensitive roles. Platforms want rules they can operationalize, and states are filling gaps fast. More than 260 AI-specific laws enacted in the U.S. through June, per that roundup.
Last one, Jefferies, via wire coverage on June 26th, argues cheaper models, like ZAI's GLM 5.2, could actually lift infrastructure demand and favor memory makers like Samsung and SK Hynix. Also, Helport AI put out a June 26th release touting H1 results and expansion into e-commerce and logistics.
Cheaper inference tends to expand usage. People try more ideas when the meter runs slower. So chips and memory can still win on volume. And Helport's note fits the broader pattern. Vertical deployments are spreading, and AI plus operations offerings are positioning AI as a labor multiplier, not just a chatbot.